Good morning and welcome to the Forex Daily Update, brought to you by Pepperstone on Monday the 19th of November 2018. I'm Darren Sinden and you can follow me throughout the day on Twitter by using @DS_Pepperstone. Okay, let's kick off with a look at the overnight changes and price moves to be aware of. But as it's a Monday, of course, we'll look at these from a weekly standpoint. And a few key things to point out here. First of all, good gains for the euro against the US dollar over the course of the last week. Up by around 1.6% over the last 7 days and trading at 113.95.50 shortly before we came on air. The Australian and New Zealand dollars also pushing back strongly against their US counterpart. The Aussie gaining by 1.86%. The New Zealand dollar adding just over 2% against its US rival. And the South African Rand has also performed very strongly, gaining by 2.92% against its US rival to trade only a smidgen above the key 14 round number. Dollar index, however, trading down on the week, 96.56 trading shortly before we recorded the video, down by 1% or more and well below that key 97 level. Speaking of things moving lower, Bitcoin and Ethereum both had a pretty tough week. Bitcoin was down by over 14% and Ethereum lost nearly 21.5% over the last 7 days. Okay then, what's on the calendar? Events that may move the markets today. A relatively quiet calendar, but still a few things of note to make you aware of. First of all, we have a convening of Eurogroup ministers in Brussels today, and obviously they'll have many important matters on their mind. Rightmove house price index data was released just after midnight last night. This is data out of the UK for the month of November, and it showed a continued cooling in the UK housing market, both on a month-on-month and annual basis. We've also had a speech this morning at 3:30 GMT from the Bank of Japan's Governor Kuroda. And to come a little bit later on this morning at 9 AM GMT, we shall have the release of current account data for September from across the whole of the Eurozone, alongside the European Union's Financial Stability Review, a document that looks at the health of the member states' countries' finances, I should say. The German Bundesbank monthly report, a look at the German economy, will also be released at a similar time. At 10 AM we shall have construction output from across the Eurozone for September, this on both a year-on-year and seasonally adjusted month-on-month basis. Then we take a break before we jump over the Atlantic at 1500 for the NAHB Housing Market Index data from the USA for November. And at 15:45, the second of the day's central bank speeches as FOMC member Esther Williams takes to the podium. 16:30 sees the US launch 3- and 6-month T-bill auctions, and that's a chance for investors to see how money markets are approaching US government debt funding this week. Okay, breaking news and comment then that's caught my eye overnight. And first of all, UK PM Theresa May is fighting to save her own job and the Brexit deal she negotiated, and she will try to sell that deal in a speech to UK business leaders today. Israeli PM Benjamin Netanyahu is also under pressure and may lose his majority in Parliament today if 2 MPs resign, as is rumoured, over a controversial ceasefire deal that he has negotiated with the Palestinian group Hamas. Meanwhile, Thai GDP has stagnated in Q3, taking annual GDP growth in the country to its lowest level for 7 quarters at just 3.3% versus market forecasts for growth of 4.2%. Okay. Time for food for thought and something for you to take away with you into the trading day and beyond. And why not think about this? As Eurogroup ministers gather in Brussels today, they will have more than Brexit on their mind. The Italian budget and the proposed reflation of the Italian economy are highlighting the very wide differences within the Eurozone finances. And the question that I'd like to pose is, can one size fit all ever again as far as Eurozone fiscal and monetary policy is concerned? We've got a couple of charts to illustrate what I mean here, courtesy of Nataxis. The first one shows the interest rates or the cost of borrowing for the Italian government over 10 years in this purple line versus the average for the rest of the Eurozone. You can see a massive disparity between the Italian borrowing cost and the rest of the Eurozone. And then the second chart shows the growth of national debt in the Eurozone excluding Greece. Just to be aware of that in the grey line there. The purple line represents a similar measure for Italy. And as we can see, the Italian debt represents well over a fifth of the total outstanding debt for the whole of the Eurozone. Right, please take a moment to read this risk warning. Trading CFDs and foreign exchange on margin can be a risky business. If you're in any doubt about those risks or the suitability of leveraged products for you, then please do contact your Pepperstone account representative and do take the time to read this risk warning thoroughly. Thank you very much for your time today.